It's Brian Preston, the Money Guy.
Jake asks, with a likely looming recession in 2023, is it worth taking a job offer that is 30 to 40% higher pay but feels riskier since I've been at my current job as a software engineer for 4 years? What boxes need to be checked before switching jobs?
All right, I want to speak to one thing really quickly because I hear this. Hey, with a likely looming recession coming, I just love when this goes on. Because whenever I hear that there is a likely, high probability, gonna happen, oh, it's coming type of event, my spidey sense starts to go off. Because when the general consensus is that there's going to be a recession, there's going to be a downturn, I start thinking, oh, okay, maybe there's not going to be one. When everyone thinks that's what's going to happen, maybe that is the clearest, purest indicator that maybe that's not the case. That sort of part was for free. Jake does ask a really interesting question. When we are making job change decisions, I think he has two questions. How do we decide from a risk and reward trade-off what's worth it and what's not worth it when we look at that? And then secondly, what are some considerations we ought to make, or what are some things, at least in the background, that we ought to be planning and thinking about? I'll say one that I think is interesting. Your ability and flexibility and malleability to do this kind of stuff changes through time, right? When you're someone in your mid to late 20s, maybe you're not married, maybe you don't have any kids, maybe you don't have a mortgage payment, and you think about, okay, should I take this career risk? I'm going to make more money initially, but it might be riskier. I might fail. I might have, something might go awry. You have a lot of time to rebound. You have a lot of time to bounce back from that maybe not going the way that you thought. You might have the dream plan and end up with a doo-doo plan, but it's okay. However, if you're someone who's a little bit later in life and maybe now you have the mortgage and you have the kids and you have the responsibility and the spouse stays at home and fill in the blank of all of the things, job security and likelihood of being able to provide and create sustainability for the family is a really big consideration. So I think that stage of life has a huge impact on how you approach making that decision.
Yeah, I mean, I had several things. I wrote down notes I'm going to go through, but we work with people in the tech space all across the country, and I know that it's not uncommon that some of the big companies have basically told any candidates that they were talking to, hey, we're actually pausing going outside because we're going to fill a lot of these upcoming goals with internal people because we're doing a reduction in force and doing other things. So first of all, Jake, it might be a very big compliment to you that you're still being offered a big pay raise while we're in this flux of, especially in the tech space where there's been a lot of downsizing and reduction in force. So that's something I just off the cuff I felt like I would lead with. But Bo he did lay it out there, and I wanted to kind of set it up with make sure you're putting on your 3D glasses. We covered this earlier today. What I mean by looking at the situation through your 3D glasses is that as Bo talked about the dream, that's the oh my goodness, this is going to work out so great. And the optimist in me loves doing big things when everybody else thinks that it's raining outside, is because when you're at the bottom and things are bad. I tell this to my retirees who are people who are quickly approaching becoming retirees, is that like right now they're like, oh, it's horrible if I retire in the next 6 months. And just like you're probably looking at Jake and be like, man, this is crazy to make this move now. But the optimist in me, the contrarian inside of me says, maybe this is the perfect time because if you think about like somebody who's retiring, what if you hit that V-shaped recovery? You get lucky, you hit the V-shaped recovery. When you're pulling out your 4.5% safe withdrawal rate, but your portfolio is making 12 to 15%, you're going to be like,
it gets really exciting
this is
real fast.
So rocking and rolling right now. So there is a contrarian way. And that's why I do the dream plan with this is going to work out so great. Let that be your optimist. Let them run wild. I also want you to create that down to earth. That's that middle plan of what you actually think will happen in the 3D, putting on those 3D glasses. And then the last one, as Bo alluded to, is that doo-doo plan. This is the one where, man, I have really stepped in it, put myself in a bad situation. How many other different ways can I say it? This is stinky for your financial life. That's where your pessimist needs to be allowed to just run with it and figure out, because here's what's so important about this, Jake, is if you will go ahead and run that pessimistic plan of this thing fails completely, you'll already be able to figure out, can I pick up the pieces, or is this going to be so devastating that it ruins me? And take that into account. That's the way I would process this, Jake, is kind of run through the put on those 3D glasses, run through all the different options, and then figure out what's best for your household.
And then I would think through, what are the other things, if I am taking a risky job change, what are the other things I should make sure to shore up? Maybe my emergency fund was 3 months or 4 months. Maybe my emergency fund should be 6, 7, 8 months, just in case something happens. What's my savings rate been when I do my Know Your Number course, or when I go do the Money Guy Millionaire Next Door formula to figure out where I'm at? Am I on track? Am I behind the curve? Am I ahead of the curve? If you are on track or ahead of the curve, that's great. If you're behind the curve, maybe you can't afford to take off this time from saving and investing. And then what does your outside portfolio look like? What are the other pieces of the financial puzzle look like? And if you're leaving an employer, this is a big one. Comp is what always causes us to move. Oh, this one's 30 to 40% more. Make sure you're also measuring benefits. What if the place you're leaving has really good, solid, great health coverage, but the place you're going to doesn't have that, and you have some sort of medical need where that's really, really important? Because then if there is a reduction in force, and then you lose that medical coverage, and you have to go on COBRA, you have to go self-insure, just make sure you're taking the other ancillary parts of your job into consideration, not strictly what the paycheck is at the end of every 2 weeks or at the end of every month.
And how it fits in the plan. Because, I mean, a lot of us people in the tech space have deferred comp and other things. You realize, just know what happens if you leave, if you've got all those things already working in the background. It doesn't mean you don't leave. It just means you need to take into account what happens when I make this change.